Hey, hello. This is Martin from Secret, the channel for learning about trading and investing. Welcome to Quick Market Analysis that we do daily. So, what we do is we analyze the charts, technical charts, and then try to understand what happened in the market and then plan for a better trade for the next day. That's December 7th, Thursday, tomorrow, 2023. So, we had the banks that's reversing after making all-time high, trapping the bulls. That's what happened today. But otherwise, the index Nifty has made another new all-time high. So the 7 consecutive day of up move. So here we go. This is the wrap up. We'll come back to this just after looking at the charts. Let's go to the daily charts. See what the candlestick. What is the candle? So it's a new all-time high at 29.57. That's 961 actually, right? It's hardly few points, less than 40 points away from the big rounding number psychological barrier, right? So very close to that rounding number, and it's a 7 days continuous move with multiple gap ups, including today. Today also was a gap up, gap up, gap up, gap up. So 1, 2, 3, 4, 5th day of gap up and 7th green candle up move, and decent close. 0.40%, less than half a percent of up moves. Isn't enough. And the trouble is with that candle. The candle that's formed is indecisive and is a dodgy. Dodgy is indicate there is a big resistance out there, or there is some indecisiveness in the market. The big bull bear fight that is happening. Slight warning for caution to be there. That's what you see there. But look at Banknifty. Banknifty was ferociously moving with mega big moves, 1600 2 days back. And yesterday it formed a spinning top, which is, we mentioned that it's kind of danger. But obviously after such big moves, some pullbacks are expected, but it did not happen in Nifty, but it happened in Banknifty. So there is a pause that is coming on the Banknifty. That pause formed a wide range bearish candle, right? Completely engulfed the previous one almost, except the VIX if you take. So that's what has happened in the banks. The banks have taken a pause, but not too big, right? Even that happened after making a new all-time high inches above the previous candle's high and then trapped. So it's a bull trap, wide range bearish candle on the top, following a spinning top, which is kind of bearish candle. But spinning top also, it's not confirmed because not gone below yesterday's candle's low. So it's a decent consolidation of a big move is what we'll have to assume, unless it goes below the yesterday's candle's low. That's somewhere at below the 46,650, right? If it goes there, then we have the gap. So that's how it is. So there is a divergence in with less than half a percent up move in Nifty and with new all-time high, while Banknifty less than half a percent down move with a new all-time high, right? So slight diversion there. So if you look at where we are, with respect to the trend line channels, we are on the top of a trend line channel, exactly the top and exactly at 61.8 retracement. Fibonacci extension, not retracement. It's a Fibonacci extension to see the projection of the moves on the upside. 61% in if it is down, Fibonacci retracement or extension, either of that. Anything above or below 61 retracement will be big moves. So here it came out of the 61, stuck up there. It has not really given a green close above. So once, if the moves extends to 21k, then it will be, and it's able to close at that, then it will be big moves outside. From here is what we'll have to expect. Otherwise, it may mean some consolidation, retracement. So that's where we're on the top of the channel at Fibonacci extension 61%. So there is some kind of resistance that you can expect there, some consolidation. Big moves have happened, all-time highs, but it has not retraced. So 4 to 5% of retracement could come in. Probably it may go further up towards the 78 retracement breakout to reach the 21,500 max, and then the retracement will come. You never know when it comes, but it's time for caution after such gigantic moves. 7 days of, look at from where we have gone, 19,900 to 2,900, 1,000 points in a matter of 7 days. 1,000, right? 1,000 points, just 7 days. That's violent moves. Banknifty even because you've done the correction button, right? So if you look at the resistance on the side, it's going to be 21k, 21,500, right? And support could come in at 28.50. Major support gap 2,700, so gap 2. Then 2,300, gap 3. And then after that, another gap is coming in 19,900. That's the support resistance on Nifty. Banknifty, the upside would mean taking out the all-time high at 47,200 it's made today, and then it could move further up to 750, 800. That zones at the resistance one side, because it's the top of the channel, right? And if it breaks out of the top of the channel, then it can go to Fibonacci 78, which is coming at 48,200 nearby zones, right? So supports could come in at major support would come in at 46,500 nearby zones, the gap. If that is breached, then you have next major support coming at 45,000 rounding number, which is a gap, as well as Fibonacci extension 50%, 38%, and all that, right? But it's it could likely take support at 46,500 zones and then complete the pause and then move forward probably, or it may complete it with today's move and then further move up towards the top. So we never know when that retracement would come in, 4 to 5% after 10%. So remember that this rally from the bottom of 42k is how much is that? If you look at, it's coming to 20% more, 25%, right? Look at this move. So it's a 12%. Yeah, so we are talking about this move from bottom. This is a 20%. So it's a 12.5% move that has happened, and this one is 22% from the previous swing low. So the Fibonacci extension is from that swing low. So it's right. So that's 20%. So we are in a rally of 22%, and we had retraced 10%. Then we had, so we have completely recovered that, moved up. It could go up to this, and then again retracement can come. So all we can do is to look at those support zones as per Fibonacci, as per moving average, as per trend line channels, as per pivots. So whatever, all that we can study or know is about the probabilities where it could consolidate or take support, or it could find resistance or consolidate on the upside. So that's all in our hands. Rest is for the market to decide. Market decides on its own based on whatever it likes, right? We just study the probabilities and then place our bets on that, and then have tight stop loss and manage your risk. That's all in our hands. Let's come to the wrap up. So basically, we had a pause today on the Banknifty, which is corrected and closed right with the white edge bearish candle 0.38. But remember, 2,000 points in just 2 days is what Banknifty has performed, so it has to pause. And new all-time high is made on the Nifty also, 21k in just below that, 40 points less than 139 points to be precise. So that's a day. So we have to be cautious about the hammer and the doji candlesticks on the top of the trend line channels after big moves. So consolidation or reversals or retracements can come in anytime. Of course, intraday it was like range bound moves, one on the upside, another on the downside. Not too much, less than 0.5%. FSO buyers, yesterday big buying of 5,000 crores. Previous week 8,000 crores single day buying was there. Today it was small selling from the Fyers, but the VI has compensated for that 1,372. So they booked the profit Fyers on the top, but very less selling, which is okay. So institutional participation overall is good, so it's fine. So resistance support levels you already seen, we're not discussing that. Momentum wise, if you see, the momentum is absolute bullish, no doubt about that. On the short term we're talking about Nifty and Banknifty. Trend indicators are bullish, crossed over to the DMI positive as per the ADX. But the only trouble here, another trouble apart from the doji and the hammer patterns that we have, is the India VIX that's spiking further 2%. So it's like 20% now, not 18 yesterday. So 20% spike when a 5% up of market up move is happening. Why the spike is happening is what, so there are some US Fed interest rates coming next week, and our interest rate hikes are coming, decisions are coming on Friday. So market is, the fear and greed index may be reflecting that probably. So, but you got to be cautious once, because it's close to 14. So it is slightly begin to cautious and manage risk. Bollinger Bands, that's used to understand, absolutely bullish on the upside. So overall the charts are technically extreme bullishness, no doubt about that. right? But technically we know that it's a pressure point. There is a point where some retracement, some pause has to be there. A lot of question about that. Otherwise, across major industry sectors, if you accept auto, pharma, and realty, rest of them are close green. IT and FMCG have done great today, greater than 1%. So the momentum wise, if you see on the short term, all the sectors, all the major 7 industry sectors are in the bullish momentum. Heavy base, all of them are the bullish momentum. IT has done excellent today, 2.5% up more. IT was underperforming earlier. Today it was ITC which was performing, and in TCS lines also did 1% kind of moves. So US indices are also on some resistance is there on the top, right? And dollar is spiking up slightly. Rupees remaining weak. Crude oil is cooling off further. 71 or something is the level. Gold is also on the top, not falling down yet, but facing some resistance after hitting the new all-time high. So, no major good or bad there outside the global cues as of now. Yeah, so this is time for momentum investing, not for value investing, because it is already broken out. It's too late to get in for looking for stocks for value investing. But no, ride the momentum and then get out. That kind of trades can be taken, or SIPs can be continued. From the investor's point, from the trader's perspective, this is bullish market and the market with the direction. Don't play non-direction and then fall victim to getting your capital wiped out. So switch to directional play until the Bollinger Bands or the indicators of momentum or trend says otherwise. Until it goes to sideways, do not play bullish. Maximum you can do is on the put side you can have spreads, non-directional, right? That's how way to play it. So as I said, the RBI event is there on 10 a.m. at Friday. This Friday can be volatile. December 14th, the next Thursday, also is the US Fed interest rate. So next Friday also can be volatile. So expect this before you get in the trade for the day. So you should be aware of all this. So manage risk and play it safe. Market is bullish definitely, but we have moved up too much and not corrected. So slight bit of consolidation correction can come in, right? So don't go blind long, but direction is very clear, bullish, right? Yeah, that's all from my side. If you're not subscribed, subscribe and share it with friends and colleagues so that it reaches out to max. Also subscribe to Twitter channels where we have regular market analysis, technical charts posted, and subscribe to them and learn from it. Thanks for watching. Happy trading, happy learning. Bye bye.